is what's the knock-on effect here from here? So my hypothesis is this was the final outcome. This was the whale that happened, right? The end of the crisis.
Since its all-time high in January, Bitcoin's value has dropped by roughly 80%. There was a time when the market was booming, fueled by the massive gains recorded by Bitcoin, perhaps fueled by the US futures ETF launch in November. It reached a new all-time high of US 69,000 after central banks switched from printing excessive amounts of their respective currencies to raising interest rates in order to combat the galloping inflation. As a result of this, as well as the war in Ukraine and a few other macroeconomic factors, riskier assets declined, including Bitcoin. Hello and welcome to Crypto Cash Out. Join to watch as Real Vision CEO Raoul Pal and respected crypto investor and expert tells us about the collapse of FTX in crypto markets along with thoughts on Bitcoin's future.
Much like an earthquake, we had an earthquake here when was it? January 2020. 2020 was a freaky year. We started with a massive earthquake in the Cayman Islands, which never happens. And, for a week afterwards, you feel the aftershocks and you're like, oh my God, is this a bigger one? That's what's going on now. So yes, there are going to be some other firms that get into trouble, but pretty much all of the levered trading houses, the levered customers all got taken out quite a while ago between January and June. The levered trading shops, the people who were lending money to the trading shops, people like Celsius and BlockFi, all of those guys, they've all blown up. So who's left? There's a couple of trading firms like Jump and Genesis, and that's it. So they will probably be smaller aftershocks if they failed. So what we've got is peak freak out because the earthquake happened and everybody's hypersensitive. I've never in my career seen sentiment like this, both in crypto and the stock market.
Really?
I mean, Twitter is so bad. I put up a relatively bullish chart, just marginally bullish, to say maybe the Nasdaq's priced in a deep recession. I must have had 100 comments of anger. How dare I suggest? I'm like, wow. People, I mean, there's anger, resentment, fear at this moment that of a scale that wasn't in 2008, wasn't in 2001. I've never seen anything like it.
Prices of most commodities are influenced more by supply and demand than anything else. By design, the Bitcoin cryptocurrency is limited to 21 million coins, and the more coins in circulation, the higher the value of the cryptocurrency, which is primarily determined by how many people are willing to pay for it. As the circulating supply approaches this limit, prices are likely to increase.
And then they gave them cash in exchange for that collateral, but that cash was customer money. Right now, we're in the realms of bad. That's what the story appeared to be. And I have been speaking a few times and said, well, you can kind of understand that if Sam Bankman-Fried is going to lose his entire empire in June, you might be psychologically pushed to do something bad in the hope that maybe you can avert it, right? If the 10% chance is worth it. But I asked the question a while ago, and I did this big Twitter Spaces, like, it is not clear to me that there wasn't systemic fraud in this whole thing to start with. The story is now coming out. It's coming out in waves. And again, nothing is verified here. But it's starting to appear that FTX was just a front for Alameda to capture customer order flow to give them an advantage. It's now becoming clear that FTX and Alameda, because we can now assume they're basically the same entity, which is very bad to have a trading operation that takes advantage of customers. We've also seen that they changed their strategy from being these lower risk traders doing arbitrage, buying one thing, selling another, or very quick trading, to big position takers. And it seems that the Luna debacle was them just providing liquidity all the way, and it blew them up. And they pretended it didn't hurt them. But it seems that Alameda itself had changed what it was doing quite a while ago and was basically a punter. Then there's the confusion of who all these people are, and half of these people don't check out properly. We then hear from the guy, the guy who's gone in as CEO, who's now the liquidating CEO, and he's like, I've done Enron, I've done all of these. This is the worst mess I've ever seen. So again, news flow's coming out slowly, but it feels like there was never any proper accounting. That there was never any customer positions that weren't being used by Alameda. Again, not clear yet. That they just pulled everything together, and there was no particular Bitcoin or anything else that you thought you bought on FTX that was being stored for you. That it was just a giant pool of cash that they were just abusing. And it's becoming clearer, even after Sam Bankman-Fried's tweets recently to a journalist, that maybe he constructed his whole personality as well, and that none of that was real. I think even last time we talked about, we need to parse out crypto into component parts so people understand, because if not, it feels like this huge clusterfuck going on and nobody knows what it is. Firstly, the central banks are taking liquidity out of the system and have been for a while. That has hit all assets. And so crypto down 75%, much like many technology stocks around down about the same. So that's been going on. That's been putting the market under pressure. At the same time, when you get to the bottom of the liquidity cycle, if you think about it, if you think there's a bunch of people in the street saying, hey, buddy, can you lend me $1? And you've only got $5 and there's 10 people asking, well, 5 people aren't going to get it. And that's what happened to the bottom of the liquidity cycle. Those who really need money don't get it, and they blow up. So in June, we spoke in the aftermath of that. That was basically the blowing up of the liquidity cycle. Suddenly you find out that all of the people who were running leverage in crypto were getting blown up, and they couldn't get any money from borrowers, or they couldn't get any money, from investors. And so that had this huge ramification. So June was actually worse than now, because pretty much it triggered everything.
Do you think though psychologically? Because right now I feel like the biggest.
Oh no! Right now, this is I'll come on to this in a sec, but yes. So June was the actual damage, right? That was basically the nuke button to say leverage and crypto, as we've always talked about, don't go together, right? So that blew up, massive balance sheets, Three Arrows Capital, all of them. But one of them was hidden, and we didn't know, and that was Alameda. We knew they were a massive shop. We knew they were kind of a bit sketchy, but they kind of said it's fine, but they weren't fine. So at that point, they were probably $9 billion in the hole, which is a staggering amount of money. Now, we don't know the exact numbers yet, and we won't do for a long time, but there were a staggering amount of money in the hole. And that was papered over by FTX.
When you say papered over, what does that mean?
They gave them FTT tokens, which is the token that is part of the FTX ecosystem that they control and Alameda control, and then gave them a loan against it. That's what it first appeared, but the plot's thickened a lot since then. But so basically they actually went up under in June. So what we're seeing now is the end of the June thing. It was the bit that didn't happen that did happen, if you know what I mean.
A liquidity crunch exacerbated by the fall of FTX has led to a loss of more than $1.4 trillion in value on the cryptocurrency market this year. Crypto's latest problems began after Changpeng Zhao, Binance CEO, said his exchange would sell its native digital currency, FTT. FTT is the native digital currency of FTX's crypto exchange. Since then, FTX filed for bankruptcy, a company once valued at $32 billion, which was sparked by Binance's move. It is estimated that around $477 million worth of cryptocurrency were stolen from FTX by hackers, most of which was converted into the digital currency Ethereum. Nevertheless, hackers are now laundering those funds in Bitcoin because they are selling Ethereum as the price of ETH is also under pressure. Make sure to go ahead and comment your thoughts on the FTX crash, and like the video if you enjoyed it. Make sure to subscribe to the channel as well so you don't miss a single brand new video. Thank you for watching, and have fun cashing out.